But KFin Technologies, the shares have surged over 4% following what was a good set of Q3 numbers. Sreekanth Nadella, who's the MD and CEO of KFin Technologies, joins in now. The discussion will be focused on the integration of Ascent Fund Services, impact of changes in MF regulations and the outlook for FY27. Sreekanth, thank you very much for joining in. Well, just want to start by talking about this guidance that you've maintained for, FY27, 40 to 45%. What are you going to close FY26 with, and what is the key driver for this 40 to 45% in FY27?
Thank you so very much. Very good afternoon to one and all. If you're tracking to KFin Tech for the last, since we went public, 2022 December, we've consistently maintained our position and our confidence in maintaining a reasonably range-bound margin delivery between 40 and 45%. This quarter and the next quarter would be no exceptions either. It should be noted that we have completed the acquisition of Ascent Fund Services, a Singapore-based fund administrator who's present in 18 different countries. Young organization, growing rather fast, and of course, lower in terms of margin profile as one would expect from a recent startup. Despite consolidating the books, we are still tracking to about 41% this quarter, and then we should be seeing a tad bit uptick into the coming quarter as well. And given our focus on controllables, be it on the cost as well as on driving a fairly diversified lines of businesses across geographies, across business services, and across asset classes, we are confident we'll maintain the similar range-bound guidance in terms of margin delivery for FY27 too.
Okay, we take that point. A lot has happened in the mutual fund industry recently. We saw the changes in total expense ratio as well. What is the kind of impact that we're seeing there? Because we spoke to CAMS a while ago. They are talking about renegotiations with their clients. Is that happening with you? They say they will get clarity as soon as Q1 of FY27. Can you give us a sense of what's happening here?
Not very different. I think the changes in the regulation have been pretty benign in terms of what was originally set out to be. A small drop in the basis points on the exit load, but a lot of other items have been excluded from the base calculations of the expense ratios, which effectively means the downstream impact on the fund managers is marginal, and that has shown in the run-up of many of the mutual fund stocks in the recent past as well. From our standpoint, much of our large contracts have already been negotiated into this year, and then we do not have too much to negotiate into the next and the year after that. So I expect marginal pressure on the basis points from here on.
All right. So as of now, we're not expecting any sort of renegotiation of contracts.
That is correct.
Okay. Can you tell us a little more about the Ascent acquisition? We expect it to be EPS accretive from FY27 onwards?
Absolutely. It is accretive even this year, if not for certain accounting adjustments we had to make, in the context of acquisition of a global entity into Indian entity from the accounting standard standpoint. But the past 6 weeks of integration largely was focused on identifying levers in terms of expanding both the revenue and the margin profile. KFin Tech has a plethora and a suite of assets which Ascent can leverage to drive growth in the 18 operating geographies they are part of. Similarly, in terms of the cost optimization, given a larger umbrella and the footprint that KFin Tech operates in, both in technology, real estate, as well as in the non-payroll expenditure in the form of audit, surveillance, so on and so forth. There are a definitive set of cost optimization levers. Many of those we have already initiated, and we expect that to drive the margin profile, even as the scale benefits too will start to accrue into the Q1. By and large, our 3 years, we usually have a 3-year horizon for any acquisition we've made. Every year we've acquired one company in the past 5 years. This one without an exception too. We believe that in a matter of 36 months, we will be able to get Ascent's EBITDA numbers closer to that of the wider KFin organizations.
You still have 500 crore rupees cash in your books, and you said you've been making acquisitions in past couple of years. Does that strategy continue, or do you think you will pay this money back to the investors in form of dividends? Buyback taxes have been made better and more investor friendly. So is that on the cards?
We've been investor friendly, all along. I think, last year we have initiated declaring dividends. The second year had just gone by. We just believe that there is a phenomenal amount of, growth capital that is required for an organization with the vision that we have. As I've consistently maintained, our vision is to create the first large global fund administrator based out of India. As we've seen over the past X number of quarters, there's been renewed focus in terms of getting large accounting firms, audit firms, whether it's in the manufacturing side, try to build the semicon side of it. There is a significant impetus to make in India and, make it scale for the globe. Fund administration, I'd like to believe, is also in one such area. It's a matter of time, when we would need fund administrators who can manage trillions of dollars worth of assets, and we're in the right direction. So in that context, dividend declarations, etc., will continue to abide by the board policy, which at this point in time is annual. But by and large, we expect the utilization of cash to go into two important areas: mergers and acquisitions and technological transformation.
The size that you might be looking at, just a one-word answer, Sreekanth, of this 500 crores for M&A?
Yes, M&A and tech.
Correct. But how much are you looking to allocate from that 500 crores to M&A?
The current acquisition that we just made, we only acquired 51% controlling stake. So we still have to pay the remaining 49%, which will accrue from years 3, 4, and 5. Currently, we are in very early stages of evaluating several other assets, but we expect any acquisition we do will largely come from internal accruals. Anything in the range of, probably about $40-50 million is something that could be in the horizon. But again, very early days, as I said.
All right. We're going to leave it on that note. Thanks very much, Sreekanth, for joining in and speaking with us. So that is KFin Technologies. Stock is doing well in a dull market, so up around 4% at this point in time. 1,000 odd rupees for that particular stock. Remember, 52-week high stands at around close to 1,400 odd rupees.